South Africa's financial markets may be sophisticated, but they're under pressure. A Moody's report shows the country continues to pay more to borrow than many of its emerging market peers. The rating agencies pointed to fiscal strains like a rising debt burden and contingent liabilities from SOEs as a core reason investors continue to demand a premium. Moody's has warned that without improvements, SA risks a negative spiral, where high rates kept up to attract inflows amid weak growth, choke investment, and further hinder economic prospects. Inflation expectations have dropped to a record low. According to the BER's third quarter survey, the 5-year inflation outlook has eased to 4.2%, down from 4.4%. The drop was driven by analysts and trade union officials revising their forecasts lower and comes just weeks after the Reserve Bank signaled it prefers targeting the lower end of its inflation band. The BER says while the bank's shift probably played a role, the decline in long-term expectations reflects a broader trend that began early last year. Construction activity picked up in the second quarter. That's as Afrimat's index rose 6.8%. Rolof Botha, who compiles the index, says a strong rebound took place during the period, driven by the value of buildings completed, higher building material sales, and improved volumes. And while he cautioned that the year-on-year change remains negative, Botha is optimistic. He expects a further recovery in activity supported by the upward trend in the value of building plans passed. Botha added that the residential property market is slowly building up steam, which will ultimately benefit construction activity at large. Outsurance has given its shareholders a reason to smile. The firm has declared a final dividend of R1.49. This takes the total for the year to R2.37. That reflects an increase of just over 36%. But that's not all. The group has also declared a special dividend of 33 cents. The company says it's able to do this due to a number of factors, which include the company receiving proceeds from the sale of UE's interest in Blue Zebra Insurance. The healthy payout to investors comes as Outsurance increased normalized earnings for the year ended June by close to 34%. Oceana says shareholders should brace for a sharp decline in annual earnings. For the year to end September, the fishing company expects headline earnings per share to be at least 40% lower. That's as weak fish oil prices bit into profits. The owner of Lucky Star will open its books on the 24th of November. Southern Sun says its half-year earnings will be impacted by higher costs. The hotel group has noted that it had to deal with revised SAP license fees during the period, as well as electricity tariff hikes and water outages, and this increased its costs. The firm has also indicated that the closure of Paradise Sun in Seychelles for refurbishments will weigh on profits. Sirius Real Estate has issued €105 million in new notes. This represents the second tap of the original €300 million notes, which were issued in 2021. The proceeds will largely be used for property acquisitions in Germany and the UK. Further afield, China's State Administration for Market Regulation has found NVIDIA guilty of violating the country's anti-monopoly law in a preliminary investigation. This development could lead to significant fines for NVIDIA, potentially ranging from 1% to 10% of its annual sales in China. Let's take a look.
China's market regulator has said that a preliminary investigation found that NVIDIA had violated the country's anti-monopoly law. It marks the latest hit for the US chip giant, which is known for its artificial intelligence and gaming chips. The brief statement did not elaborate on how NVIDIA might have violated the anti-monopoly laws. China in December launched an investigation into NVIDIA over what it said were suspected violations. The probe has widely been seen as a retaliatory shot against Washington's curbs on the Chinese chip sector. The regulator also said that the US chipmaker was suspected of violating commitments it made during its acquisition of Israeli chip designer Mellanox Technologies. NVIDIA did not immediately respond to a request for comment. According to China's antitrust law, companies can face fines of between 1% and 10% of their annual sales from the previous year. China generated $17 billion in revenue for NVIDIA in the fiscal year ending January, or 13% of total sales, based on its latest annual report. The development comes as the US and China hold trade talks in Madrid. Chips, including the ones made by NVIDIA, are expected to be on the agenda.